Welcome to the Gold Market Review for February 18, 2026. This professional report provides an educational analysis of current gold market dynamics. We begin with a detailed market overview, examining current price action and the forces shaping gold's immediate direction. As of February 18, 2026, gold is trading near $4,928 per ounce, stabilizing in the upper 4,900 range after recent volatility. Earlier sessions briefly tested lower levels, but buyers re-emerged near support. Futures remain closely aligned with spot pricing, signaling cautious positioning. Despite short-term pullbacks, bullion continues to demonstrate resilience as investors evaluate risk exposure and portfolio hedging strategies. The market is currently digesting macroeconomic expectations, currency strength, and ongoing geopolitical developments. Next, we examine the macro and policy drivers that are central to gold's overall direction. The US dollar index is firm but not surging, limiting immediate upside momentum. A stronger dollar typically weighs on commodities priced in USD. Attention now turns to upcoming Federal Reserve communications and inflation data releases as markets reassess the probability and timing of potential rate adjustments. The 10-year Treasury yield remains in the low 4% range, reflecting relatively stable inflation expectations. This keeps gold confined just below the $5,000 zone. Let's turn to technical analysis to understand current market momentum and oscillators, along with structural demand. Technical momentum currently signals consolidation. The relative strength index is near neutral, and MACD readings are flattening, suggesting downward pressure is losing intensity. Physical demand trends remain quietly supportive. Asian import activity and ongoing central bank reserve diversification continue to provide structural backing. Geopolitical diversification strategies remain an important factor. These capital flows help explain why dips toward the mid-4,900 range attract renewed buying interest. Finally, let's review the key technical reference levels traders are monitoring. Technically, support is forming between $4,900 and $4,920. Resistance remains clustered near $4,980 to $5,020. The $5,000 threshold remains the key psychological battleground. A sustained move above it could open the door to renewed upside momentum. In conclusion, let's summarize today's market report. February 18, 2026 presents a gold market holding firm in the upper 4,900 range, balancing macro forces, policy expectations, and structural demand drivers. This content is for educational reporting only and is not financial advice. Subscribe for daily market reports.